A sharp rise in oil prices is not one isolated market event. It is a traveling cost. At FluxPointEdge, we follow that cost through the financial system instead of stopping at the commodity chart. The first stop is production. Higher energy prices may improve conditions for certain producers and exporting regions. At the same time, the effect can be very different for economies that depend heavily on imported fuel. The second stop is transportation. Shipping, aviation, manufacturing, and logistics may face higher operating expenses. Those costs can influence company margins, consumer prices, and expectations for future demand. Then the movement reaches inflation. Energy affects far more than the price at the pump. It can influence the cost of moving goods, operating facilities, and delivering services. The next stop is policy. When inflation expectations rise, market participants may reconsider the timing of interest rate changes that can influence currencies, bonds, equities, and financial conditions across several regions. Finally, the shock reaches the balance sheet. Which companies can absorb the additional cost? Which ones may pass it to customers? Which sectors could benefit? And which may face greater pressure? FluxPointEdge helps users study this transmission through AI-supported data interpretation, professional market insight, structured education, and access to more than 2,500 instruments. This is an important perspective behind FluxPointEdge reviews. One energy headline can create several financial effects, and those effects may appear at different speeds. Markets remain uncertain. A transmission map cannot determine how every instrument will respond, and relationships can change as new information arrives. Its purpose is to prevent analysis from ending too early. Start with the barrel, follow the cost, observe how it moves through inflation, policy, currencies, sectors, and company performance. The original event may be simple. Its financial journey rarely is.